Hi guys, this is Lee with the Market Sense for the week of August 13th, 2019. The charts in this presentation are provided to us by Gettess and their Trade Navigator software. And this is a weekly bond market chart. Quite a bit going on here. As you can see, they've gotten above the mid-Keltner channel way back at the end of last year and haven't even been back down to it this year. And now they're showing some real excessive signs of upside here. This week so far has remained inside of last week, and if that remains to be the case, that is certainly one of the ways that a market can start to top out. Not a prediction, just observation it could be occurring. I will say this, if this market keeps going up, that's a good sign for anybody long the bond market and not a good sign for much of anything else. That probably indicates economic difficulties, well, globally, if not in the U.S. at least. And, well, it's a little scary how hard they're rallying. They're trying to tell us something. We would have liked to get a chance to buy them early. The upper band here is about 159.16. If we could have bought them early this week, that would have been a good spot. But as you can see, they've gone and tested the 164 level without going that low. Consequently, I'm not interested in buying them if they do get down there again. I kind of hope they mellow out and turn down here because, again, a continued rally is probably not good for the economy. But we'll see what happens. Stocks are sort of ignoring everything that could be bad and are rallying anyway, although this is frightening me also. I mentioned that this low doesn't look like a low, just like this one way back here in December doesn't look like a low. But, that was a low, and this could be too. The thing that frightens me about this is we've had about an 80-point range this week so far, and about 70 of that occurred in a half hour when the Trump administration announced that they were going to delay the tariffs from September to December on about 10% of the stuff. That's a pretty meek reason to rally, and a lot of rally for kind of nothing. So that's a little frightening to me. I've heard other people say what I've been thinking, which is we're one tweet away from about a 20% down move, and that's just not a comfortable way to trade. For this week, because they have started up, the middle moving average here is around 29.50. That'll be the area to monitor, see if they can get above that. And we kind of got nice even figures. If they can get above that, then it would look like the next target is around 3,000. I would much rather see them turn back down and at least test this low, because a good solid test and then starting up to turn up would look a lot more solid to me than the low does now. But I know I'm repeating myself. This is exactly what happened last December, where it didn't look like a low, but it certainly has been. So anything's possible here. Similar to the bond market, not a real comfortable way to be positioned in either direction at this point. So that's what we've got for you today. I hope you can find something profitable to get yourself